I've had many buyers, probably on a weekly basis, tell me that they are surprised that they don't have to do 20% down. That's a misconception nationally, that in order to buy a house you have to do 20% down. That's not the case. So there are 100% no money down options. Most common, probably the best product for that is with veterans, with VA loans. So that's actually separate. That's a good product. You get a lower interest rate, things like that. There are consumer products where you're non-VA that you can qualify for. You have to bring no money down. That can be, in certain situations, that can actually be an okay product, but it's a very case-by-case situation. But the most common least amount of down payment for conventional loans is 3% down. And so here in Des Moines, the average sales price is $250,000. So that's $7,500 is the minimum down payment. You need to start savings. As you start thinking about home ownership, that's the first thing you want to be thinking about is, are you going to have enough savings? The next thing I want to mention is, so it's 3%, then 5% for conventional products, so then you can do as much as you want. If you can reach the 20% down, that's awesome, because you don't have to pay prime mortgage insurance. The reason why you're able to buy a house without doing 20% down is that there's an insurance plan, essentially. It's called prime mortgage insurance, that the bank then will insure the loan in the case you default, so to provide enough equity for that. Basically, when you do less than 20% down, you owe the bank each month your principal, interest, taxes, and insurance plus PMI. And that can be anywhere from $40 to $200 depending on what the bank decides for your specific loan. So if you are a home buyer, it can be a tremendous opportunity and tremendous blessing to get out from where you're living by putting minimum down. A lot of first-time home buyers only are bringing 3% down. So, and then an additional thing we always advise our clients is that you want an additional 2% of purchase price in a rainy day fund. When you own a house, you need to be able to fund certain repairs and things like that. So if you buy a house for $250,000, kind of a simple way of looking at it, you want $7,500 in savings for your down payment. Then you want 2%, so another $5,000 in a rainy day fund in case something happens that's totally unexpected. So that's $12,500. So if you need any help, any advice on how to start building your savings, please reach out. We have our team that can really sit down and help you develop a strategy on how to start saving for your down payment. But I wanted to let you know that it's not 20% down is the requirement. It's just 3% for conventional loans if you qualify. And then there are some 100% financing options too that might be suitable for you, but you gotta be very strategic with that. And we'd love to sit down and talk to you about that. So please reach out. Maybe home ownership is a lot more attainable knowing this fact that all you need is 3% down. If you have any questions, love to sit down, grab coffee, and we can talk about a specific strategy about home buying. So thank you so much.